we had the first rate hike, and of course, it caused some worry and some concern with people. When you go back in history, Brian, it's not that worrisome, right? After the first hike, the last 6 times, going back, 6 cycles, so a long time, couple decades. 1 year later, stocks were up every single time. Now, were they up a ton? No, but they were higher. There were 17 rate hikes in 2004, 5, and 6. S&P 500 was up every single year. So yes, this is different. The headlines are scary. All the inflation, all that stuff's in there. But I kind of agree with what you just played there from Chairman Powell. The economy's pretty strong, right? It will be able to withstand this. And history would tell us when you have a rate hike, you're more mid-cycle. Brian, last thing on this, we found after that first rate hike, the S&P 500 has its ultimate peak nearly 3.5 years later. So who's to say 3 more years of a bull market? It's possible.
Yeah, and Ron, I got to correct you. It's not early. You just got to be like I am sometimes. I just stay up. I just end the day with the show. Then I just say good evening. If I say good evening, you'll know what happened. Ryan, but I love you, man, but let's go into a couple little things. The historical setup looks good, but there's 2 things out there that are kind of these huge variables, are they not? Obviously, in all those cycles you talked about, we've never been, I don't want to say on the edge of a major war, but obviously with war happening somewhere on this scale in the country or in the globe. And also a Federal Reserve sitting on $9 trillion of assets that it's going to somehow try to sell off over the next couple of years.
Yeah, you're right. And you look at geopolitical events, as devastating and as scary as they are, we look back 70 years and found the S&P pulls back about 5%, and 2 months later, you actually make up those losses. The Cuban Missile Crisis, Brian, about a 6% decline, and then about a month later, kind of made up for those losses. So we're not minimizing what's going on, but we are saying markets have a funny way of looking forward, and once again, we think we're in that scenario. This all started about 3 weeks ago, right? Stocks are actually higher since then. We had the volatility. So it's no easy answer, but again, that's what history tells us. In the balance sheet runoff, you're right. That's just another way that the Fed potentially could combat 40-year highs in inflation. We'll see. It's probably going to start in May, is what Chairman Powell made it sound like. We'll see how aggressive they are. But between that and 6 interest rate hikes, so our base case is probably 3 or 4. Still, they're coming right this year. Those are ways to combat the 40-year high inflation, which we have to do.
And listen, as a Sullivan, obviously St. Patrick's Day means corned beef and maybe a couple Guinnesses this evening. But it may also mean green for the stock market. We referenced your stat at the top of the show. I know it sounds ridiculous. It's just a day, right? We're not chasing snakes off. But historically, you found maybe there's some good cheer in the stock market today.
That's right. Again, don't blindly invest in just one day. But for the first 9 months of the year, take a wild guess, the best average return going back to 1950. Yes, St. Patrick's Day. St. Patrick's Day for stocks is up 0.37%. Doesn't sound like a bunch for the S&P. That's actually one of the best 5 days of the year is St. Patrick's Day. Believe me, it's probably totally random, or people just have a little bit of fun today and they start pushing the buy button. I'm not sure, but it is a strong day historically, and it's green.